Welcome to Clark Schaefer Hackett's 2022 podcast, Fiscal Footnotes, where we strive to provide useful insights and practical knowledge around current tax, audit, HR, and other business performance topics that impact your organization and its ongoing success. My name is Patrick Hinker, and I will be your host today. A little bit about my background. I'm a director within Clark Schaefer Hackett's Managed Services Group, and I have over 20 years of experience in both public and private accounting across several different industries. Today's important topic is focused on the new Lease Accounting Standard, ASC 842, and includes a two-part series called Countdown to ASC 842 Readiness. This series will address key areas pertaining to the compliance and implementation of the new Lease Accounting Standard. The two sections in this series include Part 1, History, Goals, and Key Impacts of ASC 842, and Part 2, Steps, Tools, and Common Stumbling Blocks for ASC 842 implementation. Today, we will be talking to two of our firm's lease accounting subject matter experts who consistently consult with businesses who need support related to lease accounting compliance and implementation. Our experts are Katie Schieber and Michael Cullum. Katie, Michael, tell us a little bit about yourselves, your background, and your experience with the new Lease Accounting Standard.
Sure. Thanks, Patrick. My name is Katie Schieber. I work in the audit department at Clark Schaefer Hackett, and I help lead teams in completing audits, reviews, and compilations for our clients. I specialize mostly in the financial and professional services industries, as well as for manufacturers and distributors. Over the past few years, I've had the pleasure of working with Patrick and Michael on learning as much as we can about the Lease Accounting Standard, helping our clients implement, and we're excited to talk to you about some of that today.
Yeah, and my name is Michael Cullum. I've been with the firm been with Clark Schaefer for about 11 years. I'm a senior manager in our audit department. So that means I do audits, reviews, compilations, agreement upon procedures, you name it, and I probably do it or have some hand in it. So I work mostly on construction real estate companies, commercial service organizations, manufacturers and distributors, and nonprofits. I went to the University of Cincinnati. Katie did as well. She's a fellow Bearcat. Yeah, and we'll not hold it against Patrick. He went to the University of Dayton, but not everybody can go to UC Patrick. So.
Michael, Katie, thank you both. Obviously, this is part 2 in our series. So in part 1, we really looked at a broad overview of ASC 842 and some of the impacts, changes the new standard will create for privately held businesses. Today, in part 2 of our podcast series, we're going to look at the implementation details and tactics. Katie, you want to go over specifics on what we're covering in today's discussion?
Sure. So we're going to look at more of the nitty-gritty pieces of ASC 842 implementation that will consist of what's in your company's lease portfolio, what are the current accounting resources that are available. We're going to talk about some calculations, get into some debits and credits, also talk about some of the policy elections that you need to make, and also some practical expedients. And then toward the end, we will also talk about some common mistakes that you might want to avoid, if at all possible, when you adopt this.
So let's get into the nitty-gritty then. We're starting with analyzing a company's lease portfolio. How do we begin tackling a private company's lease portfolio? What information, what data should we be looking for in this? Katie, you want to go?
Sure. So at first, this can seem like an overwhelming task. You have to start somewhere. And so the very first thing you need to do is find all of your leases. And if you already don't have a lease management tool or system, now's also a great time to start thinking about how you're going to track the data, where you're going to house it, and keeping that key information that you're going to need for your calculations close by, such as your lease commencement dates, how long your lease terms are, insurance information, as well as any incentive information. And then you're also going to need to look at some of those service agreements that you might have. That is where some of those potential embedded leases might be, which we were talking about in our first series. And some areas where those might occur would be if there's a transportation or logistics agreement. There might be an embedded lease for warehouse space or a truck, delivery truck, or potentially in IT agreements. There might be some leases on data centers or servers or computer equipment.
Thanks, Katie. A lot to think about, a lot of data to pull and analyze. So, Michael, let's talk about the available policy elections and their potential implications. In particular, how might certain policy elections affect the balance sheet? And why don't you dive into a little bit about IBR, or incremental borrowing rate?
Yeah, I'd be happy to. So there's several policy elections that you'll have to make. And there's really three big ones that I think are worth talking about today. The first one we briefly mentioned in the part one of our series, and that's the lease exemption, or the term exemption for short-term leases. So that's basically, you can make an accounting policy election that says, hey, look, any lease that's under 12 months or under, we're going to go ahead and not apply this new guidance. We're going to say, it's not really material, it's a short-term lease, and we are going to choose to opt out of that. I think I should probably also mention that for any of these accounting policy elections, you make them on an entire asset class. So as we talk about the short-term lease exemption, as we talk about the other two, you'll make these policy elections and apply them across a whole asset class. So while you might say that for property, and by property I mean a building, we're going to apply this short-term lease exemption to all property. If for some reason you wanted to apply it to property but not apply it to vehicles, you could do that. As long as it's broadly applied to the same asset class the same way, then you can do it between asset classes differently. Hopefully that makes sense. Does that make sense, Patrick?
It does. It does. Thanks.
Okay. So the second one is whether or not you combine certain lease and non-lease components. And again, this is a policy election that you'll make as a company. And basically it says, are we going to treat each of these lease components separately and then track them separately and book them separately and account for them separately? Or we can make an accounting policy election to wrap some of these non-lease components into the lease calculation and just roll it through there altogether. And again, that same thing applies when it comes to applying it across asset classes. And then last thing, and maybe the most important, is the policy election you have to make for the discount rate used while calculating your lease liability. So what the guidance suggests you do is use your company's incremental borrowing rate. And that sounds like fancy talk. And what that really means is if your company was going to go borrow its next dollar, whether you've got debt or not, let's say they're going to go to the bank or to whoever and borrow $1, what interest rate do you think your company would pay on that next dollar? That's your incremental borrowing rate. And, maybe that's easy to find out. It would be easy to find out if you just had a conversation with your banker. I'm sure they'd give you some kind of ballpark figure. Although in today's environment, it's ever changing, it seems like. But that's one way to do it. You could look at any debt you have currently outstanding that maybe has been issued recently. Since this inflationary period that we're in and interest rates going up, that could be another sign. And then private companies have another option where they can use the risk-free rate. And again, that's an accounting policy election to use the risk-free rate. And basically what you would do in that case is you would look up the treasury rate on a piece of an investment or debt that would have the same term as the lease that you're entering into, and you would use that exact same interest rate. So obviously for a risk-free rate, it's going to be much lower than probably your incremental borrowing rate, but that is an option. And again, that would be an accounting policy election that you would have to make as a company.
Michael, on those policy elections, can you change that annually, or is that in perpetuity when you set it?
Perpetuity.
Okay.
Yeah, it would be an accounting policy change.
Michael, thanks for sharing the policy elections with us. By definition, those truly are practical expedients to help us help companies implement the new lease accounting standards. Obviously, we're getting into more of the detail and into the weeds of ASC 842 implementation. Michael, let's stick with you. Can you discuss how companies implementing the new standard will choose their calculation method?
Yeah, so the lease liability is the financial obligation for the payments required by a lease, discounted to the present value. And if we kind of harken back to what we talked about in podcast 1 of the series, these operating leases, we've been carrying them for years, and we've carried them off balance sheet, but they really do reflect a liability. And I'm sure Katie and her teaching background is going to nod her head to this, but you think about what a liability is, and it's an obligation for future future cash outflows. And that's exactly what an operating lease has always been. It just hasn't been treated that way. So, that's kind of why we're putting this liability, this lease liability on the books now. So like I mentioned, it's the future payments discounted to the present value. And what we have to wrap into that is the lease term. And this seems easy. On its face, it might seem like, oh, okay, well, we're going to have lease payments and there's some term and we'll just add them up and we'll come up with a number. But it's really maybe not quite that easy. It'd be much simpler if an allowable answer was to just say, hey, we're going to sum them all up. We're not going to discount them. But even then, there's a lot of other questions that are going to come out of that. Like, what are there renewal options? Because that's going to change our lease term, which would then change our calculated lease liability. Hey, what do we do about month-to-month leases? And what about costs incurred, writing up the lease if we have an attorney write them up, or any other direct costs that we might incur to obtain a lease? And for all these questions, management is really going to need to determine, A, what's allowable, but B, what makes sense for their company and how they present things, and know that those things are going to be disclosed in the footnotes. And then after that, then you can kind of come up with how to calculate the liability. And while one or two uncomplicated leases might be easy to do in an Excel sheet that you find online somewhere, and that might be okay, but with anything with escalating rent payments, or if you've got a decent number of leases, say like 3 or more, this is a place where an expert or some kind of lease software is really, really, really going to be helpful.
We've talked a little bit about calculation methods and options for how a company might tactically manage their lease portfolios. Katie, why don't you briefly describe some of the advantages of using a lease management software that maybe Michael started to cover that we can use to support ASC 842 implementation versus, say, an Excel spreadsheet?
Sure. So compliance with the new standard is going to be the most important factor to consider when you're evaluating software options. And I'd like to throw out a disclaimer. You can adopt this new standard with using Excel spreadsheets. Will it be more difficult for you? Yes. Will it be as accurate? Maybe, maybe not. There's always the potential for manual calculations to be susceptible to error. So when you're looking at a software tool, some of the benefits would be, it would be one central location for all of your lease data to be. There's not a bunch of different file folders or on somebody else's computer. And so having one central location is just going to be easier and more straightforward to adopt. Also for the reporting functions, this is where I find the most benefits to having a software. So software solutions can generally generate monthly journal entry reporting. And then most of those reports should be able to be integrated or imported into your accounting system for easy reporting. The software is typically going to be more accurate and trustworthy versus just using a manual spreadsheet. And the software can also generate amortization schedules for you, which are obviously going to be a help when you're adopting the standard, but also you can use those for budgeting purposes to see what is my balance going to be a year and a half from now of your right of use asset and your lease liability. And then also a huge benefit is the ability to help come up with some of those new footnote disclosures that Michael was talking about earlier. And while we don't have an exclusive contract with any particular lease management software, we have regularly worked with and recommend to our clients Lease Crunch to use for the new lease accounting adoption.
Did you say Lease Crunch, Katie?
Yes, Lease Crunch.
Got it. Thank you. Thank you. What should a company really look for in this?
So definitely want to look for ease of use and flexibility in whether you're able to customize to what you need. So are you able to update the reporting to be what your GL numbers are with your GL number and your accounts to make it easier for those journal entries to be made? Is your software more of a one-stop shop Can it house all the documents? Can it serve as the main calculator of all of your lease data? Also, you need to be aware of how many leases can you input. Is there a maximum? And then make sure that you can have the number of users that you would like. And then also, what we find very important coming from an audit perspective, who is able to have what permissions in the software? Can anyone just go in and change items? Is there a tracking mechanism for that? So those are some things to consider.
Certainly nice to have an audit trail, right?
Yes, always.
Michael, same question for you. What should a company look for when looking at lease management software?
Yeah, absolutely. So I think being able to rely on the accuracy of the data, both the data that you put in and the data that comes out of the software, I think that's critical to choosing a piece of software that you're going to work with. And those are kind of two buckets. And a feature that will tell you that the information was added correctly, and that can be like a check function, validations that the software runs to make sure that you're not putting in things that churn out crazy numbers. There are very basic software codes that can be written into these things that tell you if something looks way out of line. And some softwares include those things. So that's something to consider. And then, there has to be a level of training with the people that are putting these in, and tools, tips, hints, walkthroughs, anything that would aid your employees into putting these things in correctly. That's something that you need to think about too. Templates, if the softwares come with templates, so that let's say you've got 40 leases, if you can put all the information into one template that applies across all and just tweak certain things so that you can kind of upload in bulk, that will save time and effort. And then if there's a way for the software company to show you that there's accuracy of their calculations. Now, I would absolutely recommend anybody who engages the software that they check the work of that output, maybe once or twice, to make sure that what's coming out of there matches what you're doing by hand. Hopefully your auditor will do that too, assuming you get an audit. But you can ask about if they've had an agreed upon procedures done on that kind of thing, if the software company has, and that would give you some comfort around that too. And then kind of something we ask on an audit all the time is, hey, you've got these service organizations. Have they got a SOC report, a service organization control report? Most companies will get that done. It's kind of good due diligence, but that's something you could ask as well. And really, what we're looking at when we're thinking about the softwares that we're going to engage, it's about pain limitation for you, or pain mitigation for you, because this is something new and different, and it's going to require effort both on your part and your employees and for your auditors. And really what these things are helpful for is pain limitation and mitigation, which is what we're all really after, right?
That's funny. Yeah, that's interesting. I think, one of your key points you talked about is a potential for an import in bulk. Hopefully our listeners have done some of that homework in advance and can rely on some of those features. So we've covered some of the details and complexities of ASC 842 implementation. And certainly this may all seem a little overwhelming to some of those that are just getting started in the transition, especially knowing that we just have a few short months until full implementation is required. Katie, let's go back to you. Where would you suggest a business start with adoption if they're at a standstill?
Sure. So the first thing that you want to do is designate who is going to be involved in the lease accounting adoption process. So designate a team, assign roles, assign responsibilities. And as part of that, make sure that everyone's educated on the new standard. They can watch this podcast, for example, and understand the importance of their role that they will have in the company's accurate financial reporting. And also you want to avoid duplication of efforts where possible. Next step, I would say, locate all your leases. Find them. Some companies may only have 2. Some companies may have over 100. So if there's more than one person involved in signing those contracts, just bring everybody together, put all those leases in a central location, and get organized. Next, I would say look at the policy elections that are available to you And remember that those must be applied consistently throughout your leases. And so, for example, one of the items we were talking about earlier with the discount rate or our incremental borrowing rate, one of the policy elections that's available to privately held companies is using the risk-free rate. And if you choose to do that, or there is not a implicit rate listed in your lease, then most often what companies are doing is looking to the US Treasury rate, and then you try and match that length of time for the Treasury rate to the lease term. And then also for getting familiar with those disclosures, the publicly traded companies have already adopted this. So you can look up their 10Ks or annual reports to see what those disclosures look like and how you might be able to get those into play.
Great. Those are all great ideas, Katie. What are some of the common mistakes or stumbling blocks companies might encounter as they're diving in on this?
Sure. So overall, number one, overwhelmingly, would be avoidance of the standard. And it is not going away. We're now just a few short months out. And so hoping that it goes away is no longer going to be an option for you, unfortunately. And for those of you who are deadline driven or waited until the last minute or procrastinators, now really is the time. It doesn't have to be crunch time right at the year-end close. So please get started as soon as you possibly can. Also, some other more specific items that we've run into would be not considering or thinking about those lease renewal terms. Remember that those have to be built in to the lease term if the company is more than likely to exercise that renewal. And then also ensuring the proper application of those interest rates. Some rates you need to put into a software would be the annual rate. Other times it might be a monthly rate. So be on the lookout for that difference. And then also, this will have to be an added item in your month-end close, doing reconciliations between all of these different new lease-related accounts. So
there's certainly a lot of moving parts.
Oh, so many moving parts. And especially if you add a new lease one month and then one retires, it can be a lot. So make sure that is being factored in both time and in your processes. And then also lastly, I will say a common roadblock would be to not reach out for advice or help in implementation. We are here to help. We are more than happy to, and we would love to hear from you.
Yeah, more communication is better unless you're reaching out to me about my car's extended warranty. More communication is better.
Great. Thank you both. And that concludes part 2 of our podcast, Countdown to ASC 842 Readiness. Katie and Michael, again, thank you both for spending time with us today and sharing your expertise. I know I truly appreciate it. To our listeners, we hope we provided you with a broad overview of the key components of the new Lease Accounting Standard and laid the groundwork for your next action steps, implementation of the standard within your business. For additional details around ASC 842 implementation, you can also see part 1 of this podcast series entitled History, Goals, and Key Impacts of ASC 842. Thank you.